Welcome back, investors, to Ticker Time News. I'm Adam, and in the aftermath of disappointing earnings reports from Snap and Google, investors were bracing for the worst ahead of Meta Platforms' Q1 earnings. But Meta did the complete opposite by posting a surprising and sizable EPS beat, despite missing on revenue. But revenue did grow at a decent 6.5%. The term that best describes Meta's performance is better than feared, which was good enough to spark a rebound of nearly 18% on the day. There's more to this story, too, than just some bargain hunting from value-oriented investors. Meta's earnings beat signifies a shift in the company's focus towards improved profitability. During Meta's earnings call, CEO Mark Zuckerberg commented that Meta is planning to slow the pace of its investments to better align itself with its current growth rates. So the company cut its fiscal year 22 expense guidance to $87 to $92 billion, and that's down from $90 to $95 billion. Efforts to rein in spending are already evident, as total costs and expenses increased by 31% in Q1 compared to 38% last quarter, when Meta missed EPS expectations. This renewed attention to the bottom line is music to investors' ears, because it shows that Meta isn't willing to completely sacrifice earnings potential while it continues to build out the metaverse. As Zuckerberg has frequently acknowledged, it may take years before the metaverse is providing a positive return on investment. Now, there were some other factors of Meta's earnings report that painted a more mixed picture. Facebook's daily active users, or DAU, is a key engagement metric that advertisers monitor to assess whether they want to spend more or spend less on the platform. Last quarter, some panic set in after DAU showed an unexpected quarterly dip to 1.93 billion. Heading into Q1, fears grew that rising competition from TikTok would chip away at DAUs again. To investors' relief, DAUs actually edged higher to 1.96 billion. The slight bump doesn't resolve the longer-term threat that TikTok poses, though, and Meta is fighting an uphill battle in its effort to slow the momentum of the short-form video platform. Meta's COO said that the company's progress towards generating significant money from Reels, which are Facebook's short-format video app, will be a, quote, multi-year journey. All the same headwinds that faced Meta last quarter remain in place, including Apple's iOS privacy changes. In fact, business conditions are actually getting worse and even more challenging now due to the war in Ukraine and Russia banning Facebook. The war, along with supply chain issues and inflation, have created a slowdown in e-commerce growth, which is pressuring the digital advertising space. Just look what happened to Apple and Amazon on their earnings report. Taking those factors into account, Meta issued downside Q2 revenue guidance of $28 to $30 billion, representing flat year-over-year growth at the midpoint. Meta's Q1 results and outlook certainly weren't exceptional. A skeptic would probably say that the company simply hurdled a very low bar, setting the stage for its relief rally. While there is a little bit of truth to that, there's more to the story. Specifically, Meta's renewed focus on profitability should have analysts ratcheting up their fiscal year 22 EPS estimates even higher. And that's good news for a stock that's badly in need of a bullish catalyst. What did you think of Meta's earnings results? Let me know in the comments below, as your comments help us all to better understand Meta platforms. Help us out by smashing that like button, sharing this video, and beating the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.